Have you ever taken a trade just like this on a chart? The market came, tap you in, run you some nice profits, then fail to hit your take profit, and after taking you out, the market went into your direction. So all of these things are due to the result of market manipulations, and in this video I'll be teaching you guys what market manipulations is and their major types of formations so that you can get to avoid them as a trader. Okay, so without wasting much of your time, subscribe and like this video. Let's dive into the main video. Forex manipulation is just traps set up by the market makers, okay? And if you don't know how to identify these traps, you can get trapped in without knowing, okay? You just think maybe your strategy is not working and this and that, okay? And under this forex manipulation or liquidity, we have two major types of liquidity, and today I'll be discussing the first one, which is the trendline liquidity, okay? And we have the trendline liquidity, we have the inducement liquidity, and firstly I'll be talking about the trendline liquidity, okay? So on the trendline liquidity, we have the setup appear like this most times. Okay, so right here on these charts, you can see that price will just come, break structure on the higher time frame, which is the 4 hour. Then on the lower time frame, which you are looking to enter, you will now get confused because you will have your zone just like this. And as I taught you guys, we have this swing point from here to this high to enter. Then when you now mark out your zone, you now see that price has come, retested the 50% mark, then push and caused a break of structure. Then a lot of traders now will now be like, okay, my entry has not been tagged in and price has already started breaking structures on the lower time frames, okay? And this is where the problem comes in, okay? So traders will now be trying to look for entries on these traps, okay? So while the setup appears like this, they will start looking for demand areas to buy from, okay? Because they can get this break of structure, they want to start buying from here and they want to start targeting higher, which is where the problem comes in, okay? So if you look at here now, you can see a lot of traders are buying and there will now be another break of structure here. You now still be looking for another entry, okay? All these things are wrong. You are made to be very, very quiet and wait for your entry to be tagged in unless there is now a break of structure and the same scenario here still presents itself again. But so many traders will still be taking these entries, okay? And not just the smart money traders, but also the trendline traders are majorly taking this and capitalizing on this, okay? You can see. Then at the end of the day, all of these stop losses that has been placed here will be taken out, and after taking it out, the market will now push to the upside. This is just the simple example I can get for you guys, and let's just look at this. So if you look here now, you will see that trend line, first touch, second touch, then the third touch. A lot of trend line traders are already here, okay? That is why we call it trendline liquidity, okay? A lot of trendline traders, they're already here. First touch, they've confirmed the first touch, the second touch, then the third touch is the area of interest for them, where they will be engaging for buys. So, and where is their stop loss? Their stop loss will just be around below. Price will take them out, then go their way. Okay, this is what you see. This is how it appears, okay? We are going to be going to the live chart to see how this thing can present themselves, okay? And you can easily avoid this most times if you can only be patient enough for price to always come to you and not you chasing the price. Because this thing comes in here, you have your zone, then why leaving this zone to start trading above this zone? Okay, because if you are trading above this zone, you still have your stop loss below this low, and once price wants to come and take them out and tap into this zone, you will be among them. Your stop losses should be around here. You should take them all out, and at the end of the day, it will go into your favor. Okay, so you're already a liquidity just like that, and the smart money concept traders that use this liquidity will be able to capitalize on all of this setup because it's one of the best A+ setup for most traders. So looking at this gold chart on a 4-hour time frame, as I taught you guys, I said, if there is no BOS, there is no trade, there is no point of interest. Okay, so this is the market here, traded below, gave us this low, which failed to take out this previous one to continue the downtrend. So the trend switched bullish. Okay, so price came, left this wick above and still raised a little bit, then left this wick. A lot of traders are being tricked here. Okay, a lot of traders are entering thinking that this wick break is a valid break, then they get taken out. That is stop loss number one. And secondly, as there is a break of structure now, we are to look for our entry here. Okay, this is the demand presented. Okay, so a lot of traders now, they now get confused. Okay, price has broken structure and they plot their Fib. They plot their Fibonacci retracement. They notice that price has come into the 50%, tapped into it, rejected off it, then started buying. And price still went ahead to break structures because this is actually a wick, and for them this is a valid break of structure. They will now mark this out. Okay, they will now mark this out. You can see price closed below that line, but a lot of traders will mark it out as their BOS, and they will start looking for what? Another point of interest, of which they will look for that point of interest. Market will come in, tag them in, then take them out. Okay, you can see the way it happened here. Market tag them in, bought for a while, then the market take them out from here. So if you look at here, this is the 4-hour point of interest. You can see that this is the first touch. This is the first touch for a trendline trader. Once these two lows is formed, then the third one should be their engagement. Then the second one was here, and this third one is for a trendline trader to take a buy. And also not just for a trendline trader, but for smart money traders that don't understand liquidity. Okay, so if you look here now, you can see there was a BOS here, there was a BOS, and there was a demand presented. This is break of structure here, and there was demand presented, and a lot of traders are buying, and it came, tap them in, run into some profit, then take them out. Okay, so price has taken out all of these stop losses resting below here. Price has just taken all of them out, and with all these things forming here, it has given you high hopes that this zone you have here is a very, very valid zone for price to take to the upside. So if you look here, you can see the way price went all the way to the upside. Just look at it. Look at this push. All these things happened because there was a lot of liquidity build. There's a lot of stop loss that has been taken. This is just where the overall orders for the banks were presented, and it was just here. They have to take all of these things out, all of these lows. They took it all out, and look at the way the price flied all the way to the upside. So guys, this is just a good example that I can give you on the trendline liquidity. And still, if you look here closely, you see that this is more like a channel for a lot of people trading the trend here, taking sells and taking buys. So you can start implementing all of these things on your trading because it's very, very necessary. So before I take any trade, I do look for setups like this. I do look for liquidity build on that my higher time frame zones. Once the higher time frame liquidity has been taken, then I will look for what change of character on the lower time frame on my point of entry. Then that is where I will be engaging on for a buys or sells, depending on how it appears. It can also appear in form of, you can look for a sell. It can also build up like this for a sell, and price will take them all out for a sell, then tag you in, and look at the way the price just melt to the downside. Okay, so all these things are good example, and how you can easily capitalize on this is by you being patient enough. Okay, identify your 4-hour zones. Okay, look for liquidity around them, then wait for a take of that liquidity before you start looking for any entry at all on the chart. So that's just how I kill this market, guys. And guys, with this you can have a trade You cannot take 10 trades and make, unless there's a high manipulation or ranges, you're just trying to take so many trades, okay? There's no way you can lose 10 straight trades. No, it's not possible, okay? And most times I target 1 to 3, so which puts me at a very high win rate, okay? So I just urge you guys to start using this. It works very, very well. It works. So see you guys on the next video. On the next video, I'll be talking about the inducement, and make sure you watch the video from the beginning part to the end part, because all of these videos, they have something very interesting that people pay thousands for, and it's free here, guys. See you guys on the next one.